Hey everyone, hope you're doing well today. This is the Deep Dive. My name's Drew Creekmur. I'm a wealth advisor at Creekmur Wealth. And today, of course, I'm joined by John. And John is our founder and senior wealth advisor here at Creekmur Wealth. And John, we got a host of things to run through, some big announcements, some reminders, just a review of what's going on in the world around us today. But before we do that, how you doing?
I'll tell you what, I'm winded. So I'm up in the office up in Avon to Colorado today, and what's our elevation here, Drew? Like 7,000 feet or maybe something
Yeah.
where we're standing. And
Yep.
anytime I run up and down the stairs, then I always had to stop and catch my breath with the altitude. So it takes a while to get used. But I'm just here for 2 days. I don't think it's enough for me to get used to the altitude. But
Yeah.
uh,
Yeah. So it's taken me a few weeks since I moved up here, and man, it gets you, doesn't it? So.
so if I start panting, everyone knows, okay, I'll be fine. Just give me a second.
Oh man. Well, hey John, let's talk about a big event. Last deep dive we talked about it. It is True Wealth Live. That's coming up here first week in May, and we started receiving a ton of interest and registrations for that event actually in the last couple of weeks, which has been awesome. We're looking forward to seeing you all. But John, for those who maybe missed that past video, why don't you remind them what True Wealth Live is, what it's about, and how they can attend that event?
Yeah, True Wealth Live is it's an event we actually started last year, and so many of you have been talking about not knowing where to turn to get information that's accurate, that they know they can rely upon as being really not biased. And so we just said, hey, we do everything of True Wealth, all the things in life money cannot buy. Let's do True Wealth Live, where you can go to get quality information. And we're going to bring in some of the best outside speakers we can find from anywhere that are there to make sure they communicate things clearly from an unbiased source to increase your knowledge and be in a good spot to make better decisions, but also do an entertaining evening and to have a lot of fun and have some time together talking, open mic Q&As as far as on the topics at hand. And so that's coming up May 2nd, and we're going to be hosting it this year in East Peoria, Illinois. And but we do broadcast it live all around the world. And we actually had folks from outside the U.S. watching last year. And I know registrations are coming in, so we do have limited seating there in East Peoria. So if you want to come and have not registered to be live and be there, definitely register for that. So make sure you hit the link and go there. But also, if you cannot make it to East Peoria, if you're anywhere around the country, clients of ours, friends of the firm, whatever it may be, want to participate May 2nd. Tuesday evening starts at 7 p.m. On site, we do have some hors d'oeuvres and everything there before the event at 6:30. But the event starts at 7. Make sure you get signed up to receive the registration link, and we'll get that for you. Drew, this year we got Bob Carey. Bob has been a friend of ours for many years. Chief strategist at First Trust Portfolios. I think they're the seventh largest money manager in the country right now. But phenomenal resource, and they just roll out facts and they explain it in a way in which I can understand, and it helps all of us learn.
Yep. Absolutely. Every time I've heard Bob, he's been phenomenal. And one of my favorite things he does is taking those live questions. And even if you're watching that on YouTube, you actually can text in your questions. So make sure you start thinking about, what are the things about inflation or the economy or investing in oil that you want to know more about. Bob does a great job taking those questions on the fly and giving you some great information. So look forward to seeing you all. You can register in the body of this email. There's a link, or you can just shoot us an email or give the office a call, and we will get you all registered and squared away on that front. So, John, one of the things that we wanted to talk about, which we've been hearing a lot about from clients, is with interest rates having risen, a lot of local community banks or even the big national banks are not paying a whole lot in interest on those extra cash savings that we all have on the side. And so, John, what are we talking about with clients for solutions that can help you earn more bang for your buck without taking on a whole lot of risk to do that?
Yeah, it's always the delicate balance, right? Is that we want to have a higher interest rate. We want to pay no taxes, and we don't want to have a chance of any loss, and so we want the best of all worlds. And sometimes it just doesn't exist. However, we try to check as many boxes as we can. And so what we've been hearing from all of our clients and friends of the firm is they have excess amounts of money sitting in the bank. And we even heard stories of some people that have in excess of the $250,000 FDIC insurance limit. And with a couple of banks that have already failed and a couple more on the horizon, folks, you do not want to have more than 250K at any one bank, but they're not quite sure where to turn. And so, we're seeing local banks and credit unions not quite keeping up with the raising of interest rates. So we have a couple of great options, and we're just finished doing research on another option here the last couple of days. And so let's kind of walk through some of those, Drew. We got Stonecastle, which is a FDIC insured money market account. It's paying, Drew's at 4.16% right now.
Yep, 4.16%. We have an extremely high FDIC insurance limit on that account. I believe it's up to $25 million of FDIC insurance, which is fantastic. And John, one of the biggest questions I've gotten about that Stonecastle account is, how liquid is it? Can I transfer funds? Can I pay bills with it? What does the ACH capabilities look like?
Yeah, Stonecastle's super liquid. You simply link it to your primary checking account and at your local bank, and then you can simply go in on your own and request to transfer money into Stonecastle or out of Stonecastle. And depending upon your bank, it generally shows up within 24 hours. I actually had one personal transaction that I requested early in the morning. It showed up in the afternoon at my local credit union. And so, but I would say typically plan on 24 hours to see money is moved. Now, if you have a smaller bank and they maybe go through a couple of different intermediaries, it may take up to 48 to 72 hours, but 3 days, man, oh man, that's a long. I think 2 days is the longest I've seen. So very liquid. And Drew, let's talk a little bit real quick about Stonecastle and what that actually is. And so they're a technology company, but what they do is they work with over 2,000 banks all across the country. And so whenever you make a deposit, your deposit gets split and diversified between multiple different banks. And so I know my personal Stonecastle account, we have about 15 different banks where we have deposits on those banks up to a $250,000 limit per institution. And so it's where we have great diversification, and Stonecastle is a technology company.
And I think what's most important with that, one of the questions I've gotten is, well, if we have 15 banks, does that mean we're getting 15 1099 INTs? And the answer is no. You get one consolidated 1099 from Stonecastle, so it makes your life much easier there. With Stonecastle, one of the recent changes they've made is they've raised their minimum initial deposit to $100,000. They had to do that because they've seen such a large inflow of dollars that if they wanted to be able to offer really the best high yield interest that we've seen anywhere, they needed to put a minimum. So that is a minimum of $100,000. Now, John, the other solution that we have for folks who maybe don't have that $100,000 is in investment accounts, brokerage accounts at TD Ameritrade or Charles Schwab, where we can go out and find the best paying CD rates anywhere in the country or U.S. Treasury bill rates. And so can you kind of walk through what those solutions look like?
Yeah, a lot of solutions there we can look at. So one is the basic buying a CD from banks all across the country. We're buying directly U.S. Treasury bills and notes, which a bill is really less than 12 months. A note is 2 to 5 years. And so we're able to buy those and get competitive rates. And right now, I think that now keep in mind, folks, the last 3 weeks, we're going to talk about why, but interest rates have been coming down. And so there for a while, we were finding a 9-month CD at 5.3%. Right now, we're seeing some 6-monthers at about 4.9%. FDIC insured limits of $250,000. Or we could buy U.S. Treasury securities in maturities really up to 30 years. But we're recommending staying somewhere at 18 months or less in U.S. Treasuries and still able to get competitive rates in the upper 4s and low 5s. And so those are two options to consider as far as a direct investment. But we also have other options to consider on that too. So we could be looking at a high-quality short-term exchange-traded fund, kicking off dividend yields, Drew, the 5.25 to 5.4 range? Is that what we're looking at?
Yeah, it's creeping up to 5.25 right now.
That's an option. We also have some package I-bonds, which are Treasury securities that are inflation protected. And we're seeing yields again with maturities into December of every year for the next 3 years. And we're seeing yields somewhere, Drew, in that 5.25 to 5.5 also on those.
Yeah.
And they have full liquidity. We can sell and get out of those whenever we want to.
Yeah, and I think the liquidity feature, John, is really one of the things. We've had so many clients come to us and say, hey, I want to earn a better rate with this cash. So let's buy a CD or a treasury bill. But the issue with, say, a CD is if you need that cash and we have to go and sell that CD back to the bank, well, you're going to be losing out on some of your interest. And so these I-bond exchange-traded funds are great because you earn your interest no matter what. But if something comes up, car breaks down, water heater goes out, we're able to sell it. You're able to keep all the interest that you've earned and get those funds out to pay for those expenses. So with this, we would encourage you all, if you have cash sitting in the bank and you want to explore earning a better rate, reach out to one of us or your advisor, and we'll be able to walk you through the pros and cons of each and find a great solution for you. So, John, I know you alluded to it. We're going to recap what's been going on in the world from an economic and market standpoint here briefly. And so we have received Fed notes from their last meeting, and we've been seeing movements in the bond market and with inflation and interest rates. And so we wanted to recap where we are at. And so, John, inflation, the last reading we saw came down again, which that is good progress to see. Can you kind of walk through what we saw with the recent inflation numbers and how it really translates to what's going on in the broader economic world?
Yeah, we're truly looking at inflation. Numbers came out yesterday, as far as on the 12th of April, and came in on a monthly at 0.1%, anticipating a 0.2% increase. And so we beat expectation there. We're looking year over year at 5%. And when you think about it, we were pushing 9.7, 9.8% in the fall of 2022. And so that is a strong decrease, and that's going to continue coming down here in the short term. Realistically, we could see inflation toward the end of the year sitting closer to that 3 to 3.5% range, which is kind of where historically that the Federal Reserve likes to see interest rates at. And now that's happened for a couple of things. One is the effect of all the increases from the Federal Reserve. That has definitely slowed down the increases in inflation. And then secondarily, something else has played into it with the number of banks that have failed. That's also made some adjustments both in the banking industry regarding their lending practices, but also as far as with companies and individuals have decided to hold more cash. And so that's actually slowing down expansion of the economy. And with that, as far as inflation. So we're definitely seeing inflation coming down. Now, Drew, what that does play into, though, is what's the Federal Reserve going to do with interest rates? And so there's still possible we may see one more increase here in the month of May. But after that, it's really looking like they're probably going to take more of a pause and monitor standpoint. Now, they may not increase in May if numbers from both the economy standpoint and also from employment, if those happen to be sharply negative, there's a chance they may not raise interest rates in May. So it looks like we're getting close to the tightening cycle this year in the short term, and which I know for a lot of people, that's a pretty strong reprieve.
Yeah, absolutely. And, one of the other major components here to what the Federal Reserve is going to do is company earnings. And so quarterly earnings that season's about to kick off. And so, John, what are we expecting with company earnings? It sounds like last quarterly earnings, there was a slight growth in overall earnings. But eventually, with how much interest rates have increased and the economy has slowed, we do have to see earnings start to slow down. Or is that completely off base at this point in time?
Yeah, so I think most economists are predicting that we are going to see a slowdown in earnings across the board. Now, there is going to be certain, we'll say, industry or sector specificity with that. And so certain sectors may not slow down as much. I think that healthcare and pharmaceuticals is one area that we probably are not going to see a decrease in earnings. But across the board, we do anticipate seeing a slowdown in earnings across the board. Now, certain areas, let's say if you have a technology company, there may be a decrease in corporate spend. But if you specifically are in the, let's say, AI, artificial intelligence arena, there may actually be an increase as far as in top line, which is revenue growth, and bottom line, which is earnings. And so we think we are going to see broad-based across the board a slowdown in earnings growth. But that being said, certain sectors still may surprise on the upside. And so we'll have to see how that plays out as far as for the next 3 to 4 weeks.
And John, I got a great question from a client recently who watches our videos, and they said, hey, we hear you guys talking about the Federal Reserve and the economy and companies and earnings. What ultimately drives the stock market? What should we really be paying attention to? Because there's so much noise out there, right? Which is why we're having True Wealth Live. What ultimately is the biggest, most important thing for us to watch when we're watching on CNBC or our nightly news?
Yeah, with everything is how does anything affect earnings? And when it's all said and done, the stock prices of any company is going to move up or down based upon the anticipation of earnings the company has in the future. And the question really is, what does current events, how will those things actually impact the earnings of the companies in the future? And so let's say, well, why would interest rates increasing, why would that impact the earnings of the companies in the future? Well, if you think about it, if we have a higher interest rates, that's going to have two impacts at the very least. There's probably more, but two direct impacts. One is on direct borrowing costs for corporations will go up, which means that they're going to have less earnings, which means more in interest expense. But then secondarily, that also means that individuals that we're a consumer-based economy, individuals will have less dollars in their own spendable dollars in order to buy more goods and services. Therefore, companies will sell less and then they will inherently make less money. So ultimately, anything that happens, you need to ask yourself, how does this affect companies' abilities to make money? Look at COVID season as an example. The stock market, particularly the technology stocks, did extremely well. Well, why is that? It's because there's a higher demand for technology services during a worldwide pandemic. And so initially there's a sell off, but as far as in the intermediate term, it actually provided a good earnings catalyst. So whenever you see anything happen, ask yourself the question, how will that event actually impact the earnings of the company 12 to 24 months down the road?
Yep. And that should give you a pretty good indication of where markets are going. And that's something that our investment committee is talking about every week whenever we meet. And that is how we are informing decisions when it comes to managing your investment portfolios, as well as your overall financial plan. And so, John, I think we've covered a ton of ground here, so I want to wrap it up. What is one thought for us to take as we go into this week ahead?
I'll tell you, the biggie is that you always want to make sure you're making decisions based upon knowledge, because that gives you a better opportunity to have a wise decision. And always check your sources of where you're getting information. If you're getting all your news from one particular television station or from one brand or from one social media outlet, just know that's probably not the best place to go to receive that level of information. And instead, you want to rely upon reliable sources, and that's why we're providing True Wealth Live. Is that whether you're in person or you're streaming online, is to make sure you all have the highest quality, most current information to make good decisions. I'd say, with key walk away, make sure you hit the link and go and get signed up today.
Yeah, awesome. Well said. All right, guys. Well, thanks for the time. We appreciate it. We look forward to seeing you at True Wealth Live here in about a month, and we will sign off for now. Thanks. Have a good week.